What we know is a drop. What we don't know is the ocean.
Hello, and welcome to the Newton Knowledge Podcast. My name is Mark Singer, partner of Newton One Advisors. The Newton Knowledge Podcast will provide meaningful content to our valued advisor community. Our discussions will deliver unique insights into the people, processes, and products that make our industry so critical. Newton One is a national life insurance planning firm delivering customized solutions structured to help clients and their advisors engaged in solving estate planning, wealth transfer, business succession, and executive benefits challenges. We are a member of the M Financial Group, which grants our clients access to the nation's elite carriers and exclusive products available only through our network.
I could tolerate any insurance seminar. For days, I could sit there and listen to them go on and on with a big smile on my face. I'd say, how can you stand it?
Sean, how we doing?
There you go. I'm very well. How are you?
Can't complain. I got this thing working, so we're good.
Man,
Fool me once.
full battle right there. Technology.
Oh, man. I could tell you, when we're talking insurance, something complicated from an estate planning standpoint, I'm your guy. But when it comes to setting up a podcast, I'm a walk-on. I'll try my hardest, but, there's probably someone better for the job.
All good.
You're light years ahead of us, though, so good for you, Mark. Don't worry about it. Yeah.
I really appreciate the flexibility and us being able to set this up the following week. And it was just something as simple as trying to run it through this TV behind me, and that's just not working. So, and I'm really not that interested in why or how. So we'll just do it on my computer. Steve Target's not with us today. I think just the thought of us talking about, college sports and football and the Nittany Lions and their circumstance, it was just too much for him to bear. So he said, you know what, I'm going to check out of here.
Completely understandable.
But to kick it off, Tim Smith, Business Development with Exceptional Risk Advisors, Chris Lack, Managing Partner, and Sean Callaghan, VP of Advisory Services. Tim, do you want to start with just your background and your career with Exceptional Risk Advisors?
Yeah, absolutely. I'd love to. So first of all, thank you for having us on, Mark. This is great, and very happy to be able to sit and talk with you guys and talk with Chris and Sean about a topic that we have many discussions on, and it's a big topic in the news. So it's perfect timing in my eyes for us to discuss. So I'm in my 8th year now at Exceptional Risk Advisors. I've been working under Chris and Sean and learning the sports disability insurance business from them. In my role, I focus on working with advisors like yourself, different types of disability insurance and coverages for their clients, key person disability insurance, buy-sell disability insurance, and then we have a big book of sports disability that we do and entertainment disability, and we're here to talk about the sports disability today.
I like it. Sean, you want to go next?
Yeah, Mark. Thanks, Sean Callaghan, Exceptional Risk. Thanks for having us. Going on very soon would be my 14th year here at Exceptional Risk. I've been in insurance for about 16 years altogether in my career. Started in P&C. Didn't like that side as much as I do like talking human capital risk. So here I am on the exceptional risk side, doing the Lloyd's of London disability contingency insurance. And I basically focus on all new business that comes across the desks of anybody within the shop to develop and underwrite plans that fit our appetite. So kind of a jack of all trades, if you may. And my goal is to help advisors be successful and to be experts in our space.
Thanks, Sean. All right, big dog, Chris, what do you got for us?
I wouldn't say that. Only because I got a good team. I got a team beside me. I'm really lucky to have Sean and Tim and the rest of the group from the office. But yeah, Chris Lack, again, Exceptional Risk Advisors. Been a partner there for I think 15 or 16 years. I started off with working in insurance up in Canada. Had my own firm going up there. Merged that into Exceptional Risk Advisors back in I guess it was late 2010 or 2011, and that was the catalyst to the move down to the U.S. and living the American dream, and along with that, building a great team that we have at ERA. We are, again, some of the lucky few guys that actually get to watch SportsCenter and say we're working when our wives are bitching at us. Pardon me, use that language. Turn the TV off, like, hang on, I'm working right now, honey. So now we've carved out a great career. Very, very lucky. A lot of gratitude towards the team and what we got going on. So we got a good thing happening.
Well, we appreciate our partnership with all three of you and Exceptional Risk Advisors and the collaboration and opportunity we have a chance to work with you guys. So thank you. A couple lighthearted questions to kick this off, and then we'll dive into the meat of NIL contracts, insuring that, also potentially insuring risk for the school we could potentially jump into as well. There's a lot of variations to this discussion. But first, Chris, you've been chosen to represent your country in a global competition? What sport or activity are you
Yeah,
doing?
I think Tim and Callie could answer this one for you. I mean, again, the Canadian roots, the blood still runs red and white for that. The Olympics are going to be great this year. So, I mean, being there with Crosby when he scored the golden goal for Canada was, I mean, still brings tingles to my spine. So I think it would be hockey on the Olympic team for sure would be pretty cool. I don't know how much I contribute on the ice, but I'd be a hell of a party man in the room after we won. That'd be great.
That's just as important.
Exactly.
Hockey's a great sport to watch live. Totally different.
I wish it carried over as well as it does. I think the technology, HD, and a lot of the analytics that are coming into the game. A lot of friends I've got that are actually working on that side of it are doing a great job in bringing the kind of game inside the game. Recognizing it since I've made the move down here. Every kid that I see understands, how football gets played, how basketball gets played, and whatnot, but they don't really understand how the recipe happens. Sometimes in hockey, they just follow the puck around and they don't see the game inside the game. So a lot of what's going on right now is kind of bringing that to it. I think it's a golden era for hockey right now. The ratings seem to be jumping and players are making a lot more money. So yeah, let's hope for it. But at the same time, I got a ton of respect for all the athletes across the other sports we cover too. It's just again really fun to do what we do.
Tim, what makes you lose track of time hobby-wise? Can't be work.
It's so funny because I was just thinking about it last night. I'm still a huge video game guy, and I've been playing, I think FIFA is my favorite game. I'm horrible at soccer, but I think playing soccer video games, and I coach basketball. That's like my favorite video game of all time. And now my son just turned 5, so he's getting into it a little bit. So I'll give him the unplugged controller, and he'll think he's playing with me, and I just play along the whole time. So I'll lose track of time doing that, and it drives my wife a little bit insane. But definitely still a big video game guy.
I'm sure your son loves it too.
Oh, he's all about it.
Sean, I don't have a question for you. So what do you want? What do you want to talk about? What do you want to tell us?
You know what I did? I realized when I sent it back to you, I highlighted the two that they answered to. So I guess that tells you where all our brains are at. I just didn't point it out. I checked that this morning and say, which one's he going to read me?
That's on me. So you pick one. Which one? The global competition or lose track of time? Are those the two you're referring to?
Yeah, those are. Yeah, I mean, unless you want to do a third different one, it's fine by me.
I could throw one at you.
Yeah, throw it at it.
Yeah. What's the best gift someone's given you that's been under $200?
The best
Well, I like that one.
someone's given me that's under $200. I would say it would be my winter coat that I wore this morning right now. It's one of those things I just don't shell out money on myself, right? I take for granted sometimes, something people put in clothes and stuff in your closet and having to forget to go out and get them myself. So yeah, great gift. Mother-in-law got me a nice coat and was happy to wear it today. Maybe not be the greatest of all time, but right now it was spectacular this morning.
That's a great response for being put on the spot.
Sean, I'm just impressed that he didn't say Giants tickets because I figured you were going Giants and we are going to have to pick you apart for that one, man. Sorry, we're going to have to repair that. That's good.
Those are $201.
Okay. And they're terrible. So sorry.
I'm a Philly jersey guy. I'm an Eagles fan, but I loved watching Cam Scatterbo and Dart. They're fun to watch.
They are going to be fun.
I hope he comes back.
Me too.
So let's jump into the topic today, which is disability protection, income protection for college athletes, insuring NIL contract. So our firm is heavily focused on protecting, I consider one of the top valuable assets one can have, which is their ability to earn an income. And there's traditionally foundational coverage offered through privately held businesses, and some of the key earners earn above and beyond that. And we'll supplement that with executive disability programs. And then, of course, from the help of all three of you and exceptional risk advisors, we'll supplement something on top of that. But here we're talking about, they're technically not deemed employees, but they are signing contracts that are dishing out some cash. So I guess the first question is, how do your contracts, or just explain how disability insurance works for a college athlete, and if it's different than if you're insuring an executive or C-suite chief officer, whoever it may be at a privately held business. And the hardest part about this podcast is there's three of you. So these questions are directed to the group, and whoever wants to jump in, fire away. But yeah, the first question, how are these contracts and coverages protecting college athletes?
Yeah, so I'll run with that. The bread and butter of what we've always done and how college disability insurance all started, many years ago, was all just based on this concept of permanent total disability, right? Career-ending coverage from your true own occupation. As you said, these are college football players, so they're not professional yet, but they have signed contracts now. But we're still, the goal of ours is still to protect their future income as a professional athlete. That's how we started this business, and that's how we still think about it for personal planning. In addition to that, we have other riders that we can attach to policies that will pay a benefit to the player if they suffer a torn ACL or a torn UCL, something that'll set them back in their career. But the gist of it was to say, hey, you're going to go to college, you're going to get a 4-year degree, or before that, you're going to turn professional. And as you get closer to being drafted, we want you to have an insurance policy that you can carry with you in the event you can never sign that professional contract. If you are become disabled because of an accident or illness and your professional career doesn't take off, we'll pay you a one-time flat tax-free benefit. And that was all based on draft projections and comparable players, stat lines. And that's how this all started, is we were offering these on a personal planning basis. And as these players now start making incomes, even seniors in high schools to freshmen in high school, we're able to look at them a little bit earlier in their career, as opposed to saying, hey, we can only look at a player, say a football player, 12 to 18 months before their draft. Now we can say we can look at them maybe even 36 months up to before their draft, because they have a $5 million NIL contract for 1 year that may be 7 the next year or 10 the next year. So it's just what we're in the world we're in now is just an evolving aspect of where we originally started.
I want to take a step back real quick. Exceptional Risk Advisors, the structure of your business, you're very niche in what you guys do. And there's not other disability carriers that protect, and correct me if I'm wrong, that are able to or in your lane that protect professional athletes, right? There's only how many sources a candidate can go to. And that's how you structured your business. And how did that come to fruition? So a little bit more about Exceptional Risk Advisors and the syndicates and the carriers you partner with.
Sure. Yeah. I'll take that one because that's kind of my day-to-day role in handling our relationships with our insuring partners. So there really is, in the channel for us, there's actually 3 clients, Mark. So there's, that athlete, that famous person, the whale in Wall Street, the guy that kills it there, the executive, the entrepreneur, like whatever that is, like that person who's unbelievably exceptional in their role. That's where exceptional came from, exceptional risk, what it is. And so they're on the policy, and we get that they're a client of ours. But the client that's probably our bread and butter really is folks like yourself, Mark, right? We spend a lot of time with you and working on that, and this is where the advisors comes in. We give out a lot of free advice to people just in order to have a partnership with them, so we can be there and recognize that these are unique things in your probably day-to-day life and a lot of other advisors' lives, but it's stuff that we deal with every day. So the phone rings a lot of times with, I got a player here, I've got this actress, I've got this singer, I've got this executive. How can you help me? So we work our way back through that side of it. And the third client in the chain is actually insurance company. So we underwrite on behalf of them. We don't have capital. We don't that we deploy on the risks. They give us the capital to deploy. We're a managing general underwriter, managing general agent for them. So we've got a responsibility to select good risk and place it and hopefully turn a profit long term for them. Overall, we recognize that losses are part of the business, and it's how we grow our business. There are going to be claims to it, but we do have responsibility to them as well. So the uniqueness of that, in that we've had the same lead underwriters. We haven't changed for 20 plus years of existence of exceptional risk, basically. We've had a long-standing partnership with our insurance partners. That's the backbone of how we do it. And then again, the work with the advisors. We've got a network of over 1,000 folks that we work with across North America doing that. And then, client list that goes on for decades and decades. And it's usually 2,500 to 4,000 people a year that we're doing unique coverage for.
And then where does Lloyd's of London fall into that realm?
Yeah, no, Lloyd's is our main market. That's
Okay.
where most roads, pardon me, lead to London. I'm heading there in 2 weeks to check in on right now it's a big renewal season for reinsurance over there. So that's a real catalyst to how our rates are going to go with the reinsurance rates. They should be going down. So hopefully we get some price concessions for our clients. But yeah, most of it leads back to London. We do occasionally place some risk in Bermuda, Switzerland, Germany, and whatnot. But we're using a lot of specialty markets, again, creating specialty bespoke products on behalf of the clients. Then you have to find the insurance carriers that want to do that. It works other ways too. They'll come to us with ideas too and say, hey, listen, we really love to grow in the area of white collar, non-written disability. And so, we'll deploy that for them and whatnot. But it's again, most roads do lead to London for us for the risk placement.
So tell me, these NIL contracts, how have they changed the landscape of your business? Obviously, the duration where you get involved is earlier, but how else?
It's just Tim. I know you got the answer, and I don't want to steal from you guys because I just get it real quick. It just legitimatized it, right? So you remember the 2009, I think it was documentary, the U Miami. I mean, the comment that was made is like, I took a pay cut when I went to the NFL. Like,
Yeah,
we've known that these guys have been getting paid for a long time, right? And this has just made it legitimate where we can go, hey, we can get involved and insure earlier because it's kosher now, for lack of a better word. Where before, we were just focused on the pro side of it because we couldn't really acknowledge the fact that they were getting paid in college.
yeah.
Now it's legitimate. So go ahead, Tim. You take it from here.
No, and you're right, Chris. And Callie, how many NIL contracts do you think you've read now over the past couple of years? Because me and you have seen a countless number of them. But in my mind, it's exactly what Chris said. It's so, and Mark, you played, so you know it too. It just is so good for the players to finally get what they deserve, in my
I love
mind,
it.
right? Like
Yeah, I
it's
totally
it's
agree.
huge. And now coaching high school players and them already thinking about it at 17, 18, it's a part of their planning and financial planning that's massive. And it also opened the door to legitimate advisors because let's be honest, there were some people behind the scenes who weren't, a little on the shady side, we'll say. So
It's just there's guys that are hanging around all the time, and they're
Yeah,
they're trying to be like, hey, if you give my uncle $5,000 in a new car, I'll get you this guy kind of thing. And that was the bad part of it.
yeah,
So again, by
yeah.
bringing this out in the foresight and actually allowing people to get involved in the planning, it just is making it better for everybody in the long run. Yeah.
So what about the types you said now you've read countless NIL contracts. I have conversations with attorneys about this all the time. How are they structured? I hear this quarterback's getting paid 4 or 5 million. What if he comes to Ohio State and he doesn't like football anymore? What's going on there? Can you protect the school for the out of pocket that they have to now dish out? Kind of like when a coach leaves or gets fired. How does that work, and how are you structuring these policies to align with these NIL contracts?
Yeah, so in the beginning, a lot of the deals we read were pretty black and white. They were, you would have thought they were negotiated by top-notch attorneys or experts, agents, but a lot of the players wanted to see the money guaranteed up front, right? It was one of those things where how much can you pay me to get me on campus by you? So that's one of those things where a lot of these players are collecting 75 to 80% of the money before they even step on the court or the field for their season of play. And the only thing in there stated was, they had to do a couple Instagram posts or autograph signing at a car dealership or attend 2 booster luncheons. Those are how they all started and what they were built around. Nothing really that would say if you got hurt or underperformed, they could strip back money or they wouldn't have to pay you in full. I think that was more the early days of NIL. Now we're getting into the point where more people are getting involved. There's more checks and balances, and hopefully that only continues over the years. Where not a pay for play aspect, but hey, if we're going to give you 5 million, and if you don't play 60% of the season, we're only going to pay you say 30% of that 5 million. There could be a prorated clawback on how much we owe you if there is missed time. And with those types of contracts and that verbiage is where we can start to develop insurance products for the
Yeah,
player and or the university collective, right? So if the collective thinks that I've invested 5 million in this player, if he misses 60% of the season, I still owe him $2 million, but as a whole, we lost Y amount of dollars. And we can look to develop an insurance product around that, right? Because that shows a true loss and an insurable interest for us.
for
So
the
as they're moving.
for the school you're talking about.
Yeah, so the school can
Yeah,
do it, and even the player, because the player can think about it from their side. Is if I hurt myself and I miss 60% of the season, I'm going to miss out on a significant portion of the payment I was going to get. And then the
yeah.
school's thinking I'm paying a player who's hurt X amount of dollars when he was supposed to get us to the college football playoff or to the next level, and we only won 3 games, kind of thing.
That's interesting. And then underwriting, how does that? I mean, I just think of the cost of it, and I don't want this to be totally football heavy, but I just think it's where we're at right now in terms of the limelight, at least in my world, what I'm seeing with advisors and the attorneys that are working on some of these NIL contracts, and just the short span and the injuries that definitely occur. The underwriting risk has to be higher, right? For a football player and the cost, or is it similar across the board? And how do you look at that?
It's two pronged. It's two pronged, right? So Yeah, the chance injuries. The nice thing is the stats are out there, right? I mean, thank the
Yeah.
Lord for gambling in this situation. We know every injury that's going on, and we rely on those guys a lot for that, right? You can run an injury report, and well, a lot of places are slow to report it. The gambling sites are on it right away. So, there's a little trick in the underwriting side of it. We'll go through it and aggregate all that information and sit down with the actuaries and go like, listen, how many times is this going to happen? Like, how many times are we going to lose a player through the course of the season? And they can peel that onion back and figure out like this is how many times we're going to have this injury on an average basis over the last 5 years. And we base off of that. So that's the underwriting side of it. But the secondary part of it too, to add to Sean's comment before, which has been unique in this, is that the contracts right now, for a lot of them, like, can't say we're going to pay you X amount for playing this sport. It's going to be like, we'll pay you X amount for making an appearance here, for signing this many pieces of memorabilia, for doing this many posts. There's a lot of stuff to it that's there. Underwriting wise, we had to get a lot of insurance companies comfortable with the idea that, yes, the contract says this, but let's face facts. They're not there to sign memorabilia. They're
Yeah.
not there to flick on the lights in the gym. They're not there to show up these things. They're there to play whatever respective sport it is. And we've got to look back on that. And then recognizing that, again, what that financial loss looks like. So, to jump into basketball, for example, I know Sean and Tim have been working their butts off on getting ready for the basketball season that just kicked off with the side of it. What does a real financial loss look like, right? Like, this part of the season in basketball, it's exciting. There's things going on, but then there's a bit of a dip, right? There's other things going on. There's the NFL season wrapping up, the college season wrapping up. Eyeballs aren't on it as much. So maybe we lose a player for a few months right now, but they're back for the tournament. They're back for the conference finals. They're back for that. I mean, if they miss the early part of the season, is that really a financial loss, or is it the financial loss if we really lose them for the back part of the season? They don't show up at the tournament. You don't have the same kind of performance you were hoping to have, et cetera, et cetera, et cetera. So again, we've got to work with the advisors and say, what does this look like for you? Where do you want to risk transfer? Do you want to transfer the entire thing to the insurance companies? Are you comfortable keeping some of it, or what's going to keep you up at night? Again, i.e., missing the tournament or something like that. Like, what keeps you up at night? We're trying to solve for that a lot of times.
It sounds like that a huge difference right now, at least with college and these NIL contracts, is you're not really being paid. It's not performance based. At least they phrase it that way. It's, as you said, you're going to play and make appearances, but we kind of know it somewhat is underlying. Whereas when you go professional, it's totally performance based. If you play this amount of games, you hit this many home runs, you score this many points, you have this many catches, you get a bonus. Does that make it harder for your team to figure out the appropriate risk in structuring these policies on the college end because it's not performance based? Or what is the main difference in structuring it for professionals versus kind of our professionals now, but the collegiate level athlete?
I think you're exactly right, Mark. The way that we kind of phrase it is there's an art to it and then there's a science to it, right? There's kind of the mix and match to it. So the focus is always going to be based on your future income and your future potential earnings. And that's just how we're going to do it for a college player. And that's still the bread and butter. And that's still like going back to the basics of how we kind of do it.
We're wrapping up. I have one more question and then just common missteps if there's any case studies you can share. We just placed a case with you guys, a law firm, the top 6 earning shareholders, and it was grouped together. So there was some lenience from an underwriting standpoint. Is that applicable or going to be? Maybe it is. I haven't had a tranche of collegiate athletes or professional athletes where underwriting is going to be more lenient or streamlined because you're insuring the entire Big Ten or the SEC. Or
I have to get better at doing podcasts. I'm sitting here nodding my head. That doesn't translate very well in the podcast. I get that. So yeah, I mean, absolutely right. Yeah, I mean, speak up, I guess. Yeah, you're 100% right. So basics of insurance, it's a spread of risk, right? So when someone identifies 1 or 2 people and comes to us, we've got to do individual underwriting on it, right? But if you come to us with a roster, especially the top schools, and say, "Hey, here's the entire gamut of the players we want to look at covering," then yeah, there's definitely concessions on it, and we can make it more streamlined for people for sure.
Oh, that's interesting. I gotta break bread with more of these collegiate coaches.
Yeah. So I mean that's all too, like part of the thing on those are, when you start grouping them together and underwriting concessions, yeah, you're typically moving to coverage that's not as robust as a fully underwritten policy. But again, you're dealing with 18, 19-year-old kids, sudden accident or injuries. They're mainly going to be accident only policies or accident sickness policies with a pre-X It's not going to cover anything, that they saw treatment on prior to the policy. But again, if they're just enrolling at the university, if they're paying them X amount of dollars and they're worried about the top 8 out of 10 guys on the roster for basketball, yeah, we could put those 8 together and build a program around that to say, hey, since we have 8, the spread of risk is there. We'll streamline the underwriting. We'll basically make it, non-medical, and issue a policy for the collective, for the school, whenever the revenue sharing gets out and they want to look at it that way. There's going to be ways to streamline, especially I think in the market we're in, where people are going to be hungry to try to write this at first and are going to be curious to see how it runs.
What are the common missteps or case studies you want to share? Obviously, keeping the clients of yours secret, that you think would be helpful to disclose to our audience.
One misconception, Mark, and I think you deal with it because you deal with disability insurance day to day. When people hear disability, I think what they picture is an athlete just in a wheelchair for the rest of their life. And that's just not the case, right? Like, we pay claims on players who excel in different types of careers like broadcasting, coaching, whatever it may be. So I think that's just a common insurance misconception when it comes to disability insurance that we kind of fight on a day-to-day, because it's hard for an 18, 19, 20-year-old to think about being disabled, right? So that's something that we kind of fight. And it's nice to have good advisors on our side to fight it with us.
Yeah, it's hard for a 40 and 50-year-old too, to imagine that.
Yeah.
The ones I'm dealing with.
My mother, I hear in the back of my head right now, penny wise, pound foolish, right? Penny wise, pound foolish. I hope that carries forward in this. I think that carries over to the U.S. too, penny wise, dollar, I guess. But listen, too much money sometimes gets focused on that NIL, the early part of it, and not enough really on the bigger picture of it, right? Because this player is going to play through, and they're going to make $4 or $5 million playing college per year, but they're going to hit the big time and it's going to be $50 million a year, right? But we're spending a lot of money focused on that insurance part of it, where I think you could reallocate some of that dollars and say, yeah, I might miss some games, or I might miss a little bit here, but we could reallocate some dollars, particularly in the budget, and look at the longer term part of it, thinking about the bigger picture, which is really the important part of it, I think, in my mind. You're going to have $250 million in your career. What if something happens really catastrophic? Like, let's focus more on that than on protecting $1 million or $2 million we'll cover enough to take care of you. NIL stuff, but as earlier you pointed out, these injuries are going to happen, right? And so that cost of money is more expensive. The short-term coverage is more expensive. If we're just covering an injury that takes you out for a short-term amount of time, it's cheaper to buy coverage on a long-term basis of my career is over. But I mean, you think about it, you could buy the nicest mansion in California, one in Florida, and the hottest car on the road, but it's never going to be worth what that career is worth, right? But you'll insure those things. But why wouldn't you insure the biggest part of it, which is, that incredible amount of wealth that you're going to accumulate over your career?
Yeah, that's so important, that long-term planning. You're speaking my language now. Is there anything you three want to touch on that we may have missed, or you're excited about in your industry before we wrap up?
I would say just to the collective and the NIL side and the revenue sharing, I think as the rev sharing gets up and going with payment plans and schedules, this will be a more systematic approach like it would be for a professional athlete, where there's going to be set payment dates, set, periods of time that they can miss before they can collect money and stuff like that. So I think with the rev sharing and all the contractual work that's going to go into it, I think this whole Wild West space is going to become a little bit more black and white. And I think that's just exciting for the future, because it opens options for universities, collectives, and players to have access to more benefits, more options to buy. And I think opening the gates to more student athletes will just, in the long run, only help the market with the spread of risk. So it's exciting from all those angles for me.
Chris, Tim, Sean, this has been great. I appreciate your time. Keep doing what you're doing.
Thanks, Mark.
Thanks, Mark. Cheers.
Yep.
Bye. Goodbye.
The material and opinions voiced are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine what is appropriate for you, please contact a member of our team.